Hello friends and welcome to this video of Accounts Made Easy. In today's video, we are going to learn about a new chapter called Consignment. Before we start with anything in detail with consignment, let's look at the meaning. Okay, what it says. Consignment is a form of business in which the owner of the goods, also called consignor, will send goods to his agent, commonly known as consignee, for the purpose of selling goods. Now, normally people think, sir, why will owner send his goods to the agent? What happens is sometimes the owner might not be in a position to sell goods due to various reasons. In such a situation, it is more advisable to take help of a professional. And normally these consignees are professional in selling goods. So the owner will send goods to the agent. Now, one thing which is very important in consignment is the next part, which says the ownership of goods will always remain with the consignor. That is, only the physical possession of the goods will be transferred to the consignee and not the title. The title in the goods means ownership of the goods. So let's understand what happens. Consignor picks up goods, gives it to consignee. Consignee will have goods with him. He only has goods, not the ownership of the goods. He will be having the goods on behalf of the consignor, and even he will sell goods on behalf of the consignor. All right. So very important for us to remember that yes, consignee will have goods with him, but not the ownership of the goods. Okay. The same concept of consignment, let's try to understand with a diagrammatic representation. Say there are two people, the consignor and the consignee. What happens is consignor is going to send goods to consignee. Now, there are a lot of legal issues which may come up in future. Consignee may say, excuse me, have you sent me any goods? So to be on a safer side, what a consignor will do is, along with goods, sends a document called pro forma invoice. Okay, this particular document contains all the details regarding the goods consigned, like the quality of the goods, the quantity, the rate per unit, the total amount of goods, and all the details of the goods are there. One thing that you need to remember is it is the consignor who prepares a pro forma invoice and sends it to the consignee. Similarly, at a regular time interval, consignee sends a document to consignor which is called account sales. Now, understand what happens. Consignee has received the goods, and after receiving the goods, he starts selling them. However, see, understand, consignor is the owner. He is a little worried. What happened to my goods? Is consignee selling? So, consignee at a regular time interval, maybe each month, each quarter, and whenever, prepares a total document in which he states all the details like what is the value of the goods sold, what are the expenses he's incurred, and all other information, and sends that particular statement to consignor, so that consignor will exactly know what's happening with his goods. All right. Normally, what happens is an account sales is accompanied with a bank draft. Why a bank draft? See, consignee has sold goods. He's received money. However, he needs to give this money to consignor. So whatever is the balance as per account sales for that particular amount, for that value, a bank draft is sent along with account sales. So this is basically how consignment works. All right. Now, let's look at the format of account sales. Before we look at the format of account sales, you need to remember one thing very clearly. It is the consignee who prepares account sales. That means account sales will contain only the information related to consignee and not to consignor. All right. So if we look at the format, it says sales, which is the gross sales that the consignee has made. From that, he will deduct two things. First, whatever are the expenses that are incurred by the consignee, and the second thing is his commission. See, please understand, no one works for free. Obviously, consignee, when he's working for a consignor, charges certain remuneration or consideration. That's called consignee's commission. We are going to discuss a lot about commission in the next slides. But here, let's understand these are the two things that the consignee will deduct from sales. And he arrives at a figure which is called as a gross amount payable. That means it's the gross that the consignee has to pay consigner. However, a lot of times what happens is consignee gives a certain amount as an advance to consigner. Okay, in case if the consignee has given an advance, obviously what he will do is he will deduct that amount of advance, and then he comes to the net balance payable, for which he gives a bank draft. Okay, now remember, the advance paid by consignee to consigner can be in form of a cash, a check, or a bank draft. It can also be in form of a bill accepted. Now, if you remember the earlier chapter that we have done, bills of exchange, right? What happens is consignee becomes the drawee. All right. So this is the format of account sales. You need to remember one thing. This is an exhaustive format. That means any information beyond this is useless information for us. Sometimes in examination, intentionally, they would give an additional information like consignor's expenses, value of unsold stock, so many extra things they might give. Ignore them. You just need to remember two things are deducted from sales. Okay, that is consignee's expenses and consignee's commission, right? So I hope we have all understood this. Let's move to the next part. Commission. As I just said a few moments ago, that no one works for free. Obviously, consignee doesn't work for free. He wants the reward for his efforts in selling the goods, and therefore commission is the consideration for which the consignee works for the consigner. All right. Now, commission can be given as a percentage or as a rate per unit. Commission. There are multiple ways of giving a commission. One is the simplest way. You sell goods for a certain price and I give you X percentage of that sales as your commission. That's the rate wise. All right. But then what happens is that sometimes the consigner says, for every unit you sell, I will give you rupees X. That's a direct flat commission. All right. You sell one unit, I give you 50 rupees. You sell 100 units, I give you 5,000 rupees. Per unit, fixed amount is decided. So it may be in terms of percentage or it may be in terms of a fixed amount payable. All right. Now, when we look at different types of commission, specifically with reference to consignment, we can see that there are three types of commission. Okay. The first one called the ordinary commission. The second is the del creditor commission. And the third is the overriding commission. These are the three commissions which are quite important from examination point of view, problem solving point of view, and other things as well, because each question will have at least a couple of them if it's a little better standard question, or otherwise one commission has to be there compulsory. Okay, let's look at each one of them individually now. The first commission that we are talking about is the ordinary commission. Guys, as the name suggests, the name itself says that it's an ordinary commission in an ordinary course of business, because consignee's job is to sell. So if he sells goods, he gets this amount as a commission. Normally what happens is this ordinary commission is paid as a percentage of selling price. I repeat, normally ordinary commission is paid as a percentage of selling price. However, sometimes the question might state that ordinary commission is to be paid as a percentage of invoice price. Why? We'll understand that a little later in the next type of a commission. But you have to be very smart in reading question. That ordinary commission is paid as an X percentage of. After of, what is the word given? That's important. Sales or invoice price. Okay. Now, I hope we have all understood ordinary commission. So let's look at the next one, which is called del creditor commission. Understand, it's a special kind of a commission. Okay, it's not the normal or the ordinary commission. Special. Then why special? Because this commission is paid to the consignee so that he will bear the risk of loss due to bad debts. Now let's try to understand this. Now what happens is, say I am consigner. I'm sitting in one part of the country and my consignee is in some another part of the country. He sells goods to someone there on credit, and 3 months later he calls me and says, sir, I had sold goods worth rupees 1 lakh to one of my customer. Now he's insolvent and I'm sorry. That 1 lakh is your bad debts. Oops. None of my mistake, but I lost 1 lakh rupee. Normally this is what happens. And I as a consignor am not prepared to bear that loss. Why should I bear loss for someone else's mistake? So what I would do is, I would say my consignee, you do one thing, you take a little extra commission. I have no issues with that, but you have to give me 100% of my money. You sell it for cash, you sell it for credit. If you are not able to collect my debts from the person whom you have sold goods, you bear that loss. I will not bear any loss on account of bad debts. So that is this special commission called del creditor commission. Now what happens if I have given del creditor commission to my consignee and still there are bad debts? I don't need to worry about that. All I do is, from the total commission payable, I will be deducting the amount of bad debts and only pay the net amount to my consignee. All right, so that safeguards me against any loss on account of bad debts. And because consignee is directly in touch with the buyers, he would be able to recover that money. All right, so the second part of this slide reads that if del creditor commission is paid, then any loss due to bad debts will be debited to commission payable account. Debited means it will be decreased. Okay, so this is about del creditor commission. Remember, the purpose of del creditor commission is consignor wants to avoid any losses on account of bad debts. All right, now let's look at the last type of a commission, which is overriding commission. Normally, if I try to understand meaning of the term overriding, that also means extra, surplus, something beyond expectation. That's called overriding. That is exactly what happens here. This is also a special kind of commission, paid if the consignee is able to sell goods at a price above the invoice price. Let's understand this. I have consigned you certain amount of goods and I instructed you that you are required to sell each product or each unit at rupees 100. All right, and you are an amazing salesperson. What you did, you sold each unit for rupees 110. Now understand this carefully. I instructed you to sell goods at 100. That's what we understand as our invoice price. But you actually sold it for 110. That's our selling price. So you see that there is a difference. Your selling price is more than the invoice price. For this difference amount, what we call as surplus, you get an additional commission. Such additional commission is called as an overriding commission. Okay, so normally overriding commission is paid only on the excess value. Important to remember. Maybe you sold goods for 110 each, but then you don't get overriding commission on rupees 110. You will get overriding commission only on the excess amount. That is that rupees 10 which comes there. Okay, so you get it only on the excess value which is above the invoice price. This can be calculated as, so how do we calculate our excess value? It's the actual selling price minus invoice value. Okay, in our example, our actual selling price was 110. Our invoice value was 100. So 110 minus 100 is 10 rupees. So overriding commission you will receive at this excess value of rupees 10. Normally you need to remember that overriding commission rate, that is the percentage, would usually be very high. Okay, maybe about 20%, 25% or something. So this is one thing that you need to remember. With this, we have understood different types of commission. But one thing that I want to let you all understand is there are two ways of giving the rate. Okay, one which is called before charging such commission. Now, if the question says before charging such commission, in that case, we don't need to worry about anything. It will be a simple amount multiplied by rate divided by 100. That's the very normal way how it is done. Amount into rate by 100, the total selling price into rate, maybe 10%, 20%, whatever we have agreed, divide by 100, right? but sometimes they might play with words. Okay, and it says 10% commission before charging such commission. Now that is where the formula changes. If it is before charging such commission, it becomes 100 plus rate. Now this is something that I want you people to understand. Let's say if it is a 10% commission agreed, then it would become amount multiplied by 10, and this will be then divided by 110. How we got 110? 100 plus rate 10. Normally it will be amount into rate by 100, but you have to read question carefully. If it says before charging such commission, in that case it would be rate by 100 plus rate, which is 10 by 110. Normally with overriding commission they do use this clause. 20% overriding commission will be paid before charging such commission, and this is the difference. Okay, so guys, you have to be a little more smart, little more careful when you read the question. All right, so guys, this is exactly what we do in today's class. In next class we'll continue with the other concepts of consignment before we actually move to the practical questions. All right, so till then, thank you guys, take care, bye bye.